Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that's a bit like a roller coaster, full of ups, downs, and maybe a loop-de-loop or two. We're looking at Silexion Therapeutics Corp Amendment Report. This report is to update their prior report about being able to stay on the Nasdaq stock market. But things are in peril. Silexion is a company in the biotech field. What that means is they work to use biology to make new drugs and treatments. It's like mixing science and medicine together. But like most small biotech companies, they need to keep their stock prices high enough to stay afloat and fund their research projects. Before we start, if you appreciate getting real insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come say hi. Okay, let's get started. Silexion put out an update because the first version wasn't quite right. It's like when you send a text and then immediately send another one saying, oops, I forgot something. They're clarifying when their stock might move to a different section of the stock market called the Nasdaq Capital Market. This is like moving from a main highway to a smaller road. It also involves how they plan to boost their stock price if it falls too low. The crux of this whole filing is because Silexion was at risk of being kicked off the Nasdaq stock exchange, which is not good. Nasdaq gave them a little bit of breathing room and said, okay, but you need to comply with certain conditions. Two main things were outlined by the hearings panel's decision. The first thing is the transfer of listing to the Nasdaq Capital Market, which is a big deal because it usually means the company's stock isn't doing so hot. It's like getting moved to the minor leagues. The second thing is the price of Silexion shares need to stay above $1. If it trades below that price for too long, they will be in big trouble. First, let's talk about moving to the Nasdaq Capital Market. It's not a great look, but it's not the end of the world. The main effect is that fewer big investors will want to give Silexion money. Being on a less prestigious market can affect stock prices and how the company is valued overall. It's still part of Nasdaq, but with stricter requirements and less visibility. Essentially, the company will be under more pressure to perform well to avoid further demotion. Then comes the bid price rule. This is where things get trickier. Nasdaq says a company's stock price needs to stay above $1. If it doesn't, it is out. Silexion is trying to avoid this by doing something called a reverse share split. Think of this as taking a bunch of small slices of pizza and making them into one big slice. Basically, Silexion will combine 15 of their existing shares into one new share. So if you owned 150 shares before, you'll only own 10 shares after. The goal is to increase the price of each share and meet Nasdaq's minimum requirement. If that sounds too good to be true, there is a catch since shareholders needed to approve this plan first. At the time of this report, that vote was slated for the next week. If approved, there is a waiting period before they can do such split. In this case, it goes to late July. Because of that, the company would need until August to confirm to Nasdaq. Now, there are no guarantees that Silexion will meet all of Nasdaq's requirements. The report itself contains statements warning that it might not work out. Think of it like promising to clean your room, but really hoping you have the time to do it. If Silexion can't keep its stock price up, it could get kicked off the Nasdaq, which would make it harder to attract investors and raise money. Also, it's important to note that this update contains forward-looking statements. Companies include these warnings because they don't have a crystal ball. Future results could be different than expected for all sorts of reasons. The company's annual report, also known as a 10K, has even more risks and uncertainties, so anyone interested in investing should read it closely. Now, let's put all this information into perspective. What does it mean for Silexion? Silexion is playing a risky game when we zoom out. There is no guarantee they can keep their stock listed on the Nasdaq Stock Exchange. This situation happens to many companies, especially in the biotech field, where it's common to see a lot of big promises with very little profit. If the shareholders fail to sign off on a reverse split, any amount of planning the company does will go out the window. If shareholders accept the 1-for-15 reverse split plan, even then the company needs people to invest and purchase the stock at over $1. The reverse split plan is very risky. It also heavily relies on the good graces of other investors. The company's fate depends almost entirely on its shareholders' decision and the overall belief other investors have in the company. It's going to be a rough couple of months and a lot of future outcomes are going to be determined soon. Alright, that's our breakdown of Silexion's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.